Well, we had another big sell-off in oil prices today, as well as energy shares. At the worst point of the day, the TSX was down about 500 points. WTI oil down more than 4% at the worst levels of the day. Here to give some perspective on what is happening and how long it could be happening for, I'm joined by Bart Melek. He's Director and Head of Commodity Strategy at TD Securities. Nice to see you.
Great to be here.
Your phone is busy today. Are you ringing off the hook?
Yes, it is. I have a lot of people wondering what is happening with oil, and unfortunately, we don't have a lot of good news to tell them.
Okay, so what is happening today? Let's start with that, because there seems to be some sort of trigger, because there's a lot of volume in the market today as well.
Yeah, you know, one of the triggers was that the news came out this morning that shale formation oil production isn't really going down. Certainly that should be no big surprise. Lower prices, as low as they are at this point, don't mean that you stop production right away. When we're talking about all-in costs, we're talking about the cost of capital over the life of a project. People don't go stopping funded project just because we have low prices, for the last few weeks. These projects will continue to operate for another 2 quarters or so. Then we're going to start seeing depletion in production.
Which means oversupply continues. It just keeps on out there right
Exactly,
now.
And this is what the market is pricing in. In this quarter, so Q4 of 2014, we're estimating a surplus of about 2 million barrels per day. That's every day.
And that is almost 3 times what the world demand is it not, when you think about it?
Well, it's 3 times than the demand growth forecast for next year.
Wow.
Not quite 3, maybe around 2, but in Q1 of 2015, we're looking at a surplus of about 1.3, 1.4 million barrels per day, and that is assuming that OPEC actually cuts its production to equal the quota, and we're also looking at a hefty surplus in the second quarter. So low prices could be here for quite a while. We will have a glut unless there's some sort of an emergency action by OPEC.
What is low price mean? I think I saw an analyst come out late last week with $43 oil.
Well, certainly based on the global cash cost curves, a 5 handle on WTI is very much a big possibility. Could we see a 4 handle on WTI? Yes, we could. We are still quite long in the speculative space, particularly in Brent. There are a lot of people who were betting that OPEC would take very aggressive action on the production side. Needless to say, they were wrong. If all those people decide to unwind their long positions and strap on some shorts all at the same time, we could easily see prices fall through, a $50 mark.
Let me ask you about ripple effect, because I think that's what we're seeing a lot of right now. We're seeing energy shares, obviously in the TSX, getting hit disproportionately hard as compared to the rest. And we hear about all the other ripple effects in terms of gasoline prices and more money in people's pockets. But tell me about, from your perspective, what ripple effects you see from low oil prices.
Well, we're seeing a ripple effect in the currency markets. For example, we're seeing the US dollar rally. Low oil prices are actually a very, very good thing for the United States. They're going to get a net benefit of about $250 billion or so if these prices persist for the next year or so. And that makes the United States look better than everyone else. So it also means that U.S. monetary policy tightens up ahead of everyone else, and it means the U.S. dollar is strong. That is a very bad news story for commodities broadly. It reduces costs.
So it begets the same cycle.
Absolutely. And also, less revenue for oil producers means that there are less petrodollars available looking for assets. And that means we are seeing knock-on effects probably for gold, base metals as well. And investors are usually invested in the index. So
they take complex. The entire commodity index.
They buy the complex, and if oil is a sell, they tend to sell the entire complex as opposed to just oil and keep metals. They'll just sell everything and see what happens.
Which has, again, a knock-on effect to the TSX. I'm thinking disproportionately to the commodity side.
Well, that's right.
Yeah. Let me ask you a last question for you. What should we be listening for as we watch oil prices from here on in? What are the important things to note?
I think we should be looking at what the impact is on global growth, particularly in the United States and China. Both are very big importers and net importers of oil, even though the United States is a much bigger producer than it used to be. It still imports quite a bit, and it is a consumer society, so lower oil prices essentially mean a tax cut for every consumer in the United States. And China is also a very big importer of the stuff, and lower prices means that folks in China have more spending power. I would also be very closely listening to the screams of pain in OPEC. I suspect this isn't going to be allowed to persist for too long. It might be a quarter or two, it'll be long enough to destroy valuations and probably dissuade new capital investment. And I think if the pain gets too great, OPEC may react in the latter part of 2015. Maybe even before. I mean, who knows? They need significantly higher prices to balance their budgets. A country like Saudi Arabia can manage. Countries like Venezuela cannot. So it'll be very interesting how that politic develops.
Bart, always a pleasure. Thanks so much.
Great to be here. Thank you.
Bart Melek, Director and Head of Commodity Strategy at TD Securities.